Roger, I'm so honored you're here today. You're a man that has originated 1.4 billion 2 years ago, 1.3 billion the year before. You're a serial entrepreneur. You have many different companies. You're a master marketer, self-described as a marketing company who does mortgages. You are the biggest broker in North Carolina, South Carolina, Tennessee, and one of the top brokers in Ohio and Florida. What are you most proud of?
Thanks, Sam. I appreciate you having me on here today. We're proud of a lot of things. I think primarily, if you ask me, what I'm most proud of, especially on a recent basis, is our ability to weather the storm that we've all experienced, since 2022. I think we weathered it gracefully and did very well in light of a lot of challenges. I look at things on a team basis. I'm incredibly proud of our team, what we accomplished during that time, our ability to stay intact during some pretty rough years when a lot of other companies were downsizing, shutting down, pivoting to a totally different business model. We've never had any layoffs as a company. We kept our team intact, especially our top performers, our top producers, all those people stay with the company. So our resilience in the face of some really tough times, and our company's ability to get through that intact, ship afloat, and with a really phenomenal attitude there's just nothing I've been more proud of in my 18 years of being an entrepreneur and business owner. That was something that I think I'll always look back very fondly of, for sure.
That's amazing. It's they say like you never know the test of a man's character or a person's character until they're really getting hit in the face. And like you really got punched in the face off this. We were talking about how difficult it was. Give us a little more context, like for what it was like, what your business model, what happened, and then really dive deeper into personally what you were going through.
Yeah, so we launched in 2017. I had owned another mortgage company and some other businesses during the time, and when we launched, our goal was to build a great company that was marketing first, and what we've always really done is scale very disciplined, right? So when we add people, we're very disciplined. 19 was a great year for us. 20, we knocked out of the ballpark, and 21, we absolutely hit a absolute home run. I mean, we took about 13 to 15 loan officers average, so we did just shy of 1.4 billion. So an average of about 100 million per people. We made some really, early 21 in February, there was a big rate spike. It was happening at Valentine's Day, and it made me rethink what the market's going to do, because a lot of people just had this feeling that the rates were going to stay in this, inappropriate low level for a very, very long period of time. And I just thought to myself, this can't happen. Like this is going to end, abruptly and violently, is what I told my people. So in early 21, we made a strategic decision to quit hiring people. Most companies and my peers, I know a lot of people in the broker industry were scaling, through the moon, double, triple their team. And, from 20 to 21, we doubled our volume from 720 to like almost 1.4 billion. And we didn't add any players when we did that. We kept our team size about the same. And unfortunately, I was dead on right. I probably underestimated, the change that was going to occur, and the rapidness that it was going to happen, and also the longevity, of that. And so, 22 hits, rates start going up, and then really they went up for the next almost 2 years. But luckily we were in a good spot from a balance sheet perspective. We had saved a ton of money. We had, plenty of money on our balance sheet. We did not have, our head count wasn't inflated. We were right sized for that market. But with anything, when you have a lot of young people that are new to the industry, they're used to one paradigm, right? That paradigm was radio ads go out all day, every day. People call in, you take an order, you're going from 4 to 3, 0 closing costs. Like, almost anybody can sell that. The great people sell it really well, but even a bad loan officer can sell that. I mean, it's not hard. And so really what became incredibly challenging and something that took a lot of discipline and understanding what my employees needed and wanted, and just empathy and things of that nature. We really had to change the paradigm of what mortgages actually do look like. They are incredibly challenging. I mean, there's a finite amount of leads out there during those times, and then they're incredibly hard to sell, a client that's not just dropping their interest rate. So it was really, really challenging to get a group of people to follow you down this new path, which was things would be harder now. And we all have to rethink what things are going to look like moving forward. It's going to be incredibly challenging for a long period of time. The pendulum swung incredibly fast. So keeping your employees happy, engaged, wanting to come to work, understand that they are discouraged, but finding a pathway forward for them to be happy, to keep all your employees gainfully employed. Because I have some really phenomenal employees. Like some of my operations staff out there are really as good as they get in the industry. I mean, they're phenomenally good. So you have to create a vision for those people of, hey, things are not going to be terrible forever, and they're not always good forever either. But this is just the market that we're in right now. And so we have to make a commitment to each other, right? So my commitment to my team, and I said it out loud for years, I'm not going to lay anybody off. Am I going to lose money doing that? Absolutely. And I did lose, a good chunk of money, during the latter half of 22, really up until the beginning of 24. We operated in the red consistently. And I'm not embarrassed to say it. I mean, I'm actually proud of saying it. I mean, that's just that, because what we did in doing that was we kept our entire staff on board, and we all made a promise to each other. Maybe
there you are. I was just about to text you.
But what I say was we all made a kind of some of it was unspoken, some of it was spoken, but we all made a promise to each other that, hey, we're all going to give each other everything we got. Everybody knew when they came into work, there wasn't a pendulum over their head. They weren't going to get laid off, but they also gave me everything they had. They did things they weren't used to doing. They worked harder than what they expected to work. But those were there were some incredibly tough days of, trying to stay positive in front of your team. You have to be, as a leader or a general going into war, you have to show resolve, and you can't give them the impression that you're worried. You have to stay positive. And there's some days driving home where it was just, those were tough days. You're like, shit, like this is not ending quickly, and we are losing money, but we have to just keep our ship intact, because the wind eventually is going to come again. And when the wind comes, if you don't have the sails there to catch it, you're not going to catch it. And so those were very, very challenging days. I would say that it took every bit of experience I had. I had to learn how to do things I hadn't done before in terms of how to manage people during a challenging time. And I think that in hindsight, what I'm really incredibly proud of is how well we all did as a team. And they're all still here. Like if you look at my office right now, they all stayed. And now they're loyal, they're proud, and they know that I gave them everything I had when they needed it. And now they give me everything they had when I need it.
That's amazing. That's incredible. That your commitment, you're, I think, the only person I know in the mortgage industry, and I know a lot of billion-dollar producers, company owners, CEOs. You're the only one I know who didn't lay off a single person.
Yeah.
I think I would love to know, what does it look like when you're losing so much money? You've made promises to people that you have full intention of keeping, and there's no way you're gonna not keep your promise. What are you personally going through? Like you said, you drive home and it was difficult, but like, what does it look like, and how do you personally deal with that stress?
Well, I got to turn off something's on. Let me turn off my dial pad here. Sorry. I think that so I am incredibly good under pressure. I've done this for a very long period of time. I started my first business in August of 2007. You think about Wachovia failed a month after I started. They had Bear, Lehman, and they had the entire financial crisis hit. Those were tough years too, especially when you're young. You don't have the capital that you have as you age. I mean, obviously I was 26 when that happened. I just didn't have a lot of money, so I had been through that before, but not to this extent. But it was incredibly challenging, and you just have to try to wake up every single day and put your shoes on, put your clothes on, go to work, and give it all you got, and create a realistic path moving forward. I think where a lot of leaders generally go wrong when things are incredibly challenging is they either are not honest or transparent with their employees. They come out there and pound their chest and say everything's gonna be great, we just got to work harder. But sometimes you can't outwork or outsmart or outspend every single market. And so you just have to be honest with your employees and say, hey, this is what's going on. This is the money that we're losing. We don't think this is going to last forever. We are prepared financially to make this work. And this is how we're going to do it. This is our path forward. These are the steps we're taking. So yeah, it was incredibly challenging, but I generally tend to work extremely well under pressure, and I'm hard to discourage, and I'm really hard to destroy. And I think those traits probably helped a lot.
That makes sense. I just want to kind of translate as I heard it, and correct me if I'm wrong. There's two things I want to cover. One is basically when you're going through the storm, all you have to do is just get up, don't give up, get in, do your best, and outlive the difficult situation, and don't make bad decisions. Be honest. And I think that's the second thing that's really important. And that applies to everything. For a loan officer, if you're having a bad file, talk to your borrower, be honest. If you're a branch manager, if you're a company owner, talk to your staff, talk to your loan officers, be honest. Don't hide things. Don't make things better than they are. Don't lie.
Yeah.
Did I capture it right?
No, 100%. And I'll tell you the last thing I didn't mention, and this is the hardest thing for most companies to do. You can't really screw with your teammates' compensation while you're at it, right? Because what you have to be, I think the most successful business owners, branch managers, whatever you may want to call those, you have to be able to accept that you're going to maybe lose more money than what you like to at times. And what I think a lot of companies make the biggest mistake is they start decreasing the compensation across the team. They start getting rid of perks, 401ks, health insurance, and just trying to increase their bottom line through decreasing your top line expenses. And what we did the entire time is we never changed compensation for our employees. Actually, in fact, for some of my operations employees, I had to add some compensation in there, to keep them on board, because you don't want to lose great players during the downtime. So I think one thing that we did really well was just keep our compensation intact, because once you're employed, they're already not making as much money, and then and they're already working harder to make less money. And then all of a sudden you go and say, hey, by the way, now you got to work even harder to make even less money. And then people start leaving. And that's what happened to most companies. So that was really tough, but that was a decision I made. And it was, I think it was the right decision.
Yeah. It seems like you're very proud of the decisions you made. And it's worked out well for you because the market has started to slowly turn, you're in a position to succeed. The analogy you use that I really like is if you're in a boat and the wind comes and their sails aren't up, you're not going with the wind. So now you've always had the sails up ready to go. I'm curious, what does personal life look like for someone whose company, only just one company is funding 1.4 billion? So what does your personal life day to day look like? What does your family think about how much you work? All that fun stuff.
Yeah. So, being an entrepreneur or owning a company, you're always threading that needle of trying to give your company everything you have, because if most business owners, but certainly myself, when I look at my company, it's an extension of my soul. It's part of my being. Like I have to build this thing. Like there's really no other option. Like it's one of the most important things in my life behind my family and my friends. I wake up every day between 5 and 5:30. I usually knock out an hour, hour and a half of work. My kids wake up, especially in the school year. I try to make breakfast for the kids. I'll try to, I usually take one or two of them to school. I try to get in the office every day at 8:30. My office day is I'm plugged in from the time I start to the time I leave. I work out every day at lunch in the gym to kind of get, I need that for my soul as well. But I always try to get home at exactly 5:50 or 6 o'clock every single day.
Wow.
What I really try to do, work-life balance is an interesting thing. It's, if you own a company, you're either always working, but if you're not working, you're thinking about working. So the balance is hard to balance in general. But I always try to be there for my kids, sporting events. I oftentimes I cook dinner for the family. I try to stay unplugged as much as humanly possible during the evenings, mornings, and weekends. And then when they go to bed, I usually get back to my computer and knock out, an hour, hour and a half work in the evenings, when I don't need to give them my attention. Now, does my wife get as much attention as she wants? I don't know. Maybe not. But I'm always trying to balance that. My kids are 10, 7, and 3. So it's, the pivotal years of their lives. You only get so many years of their childhood. So I think I've done a good job of balancing work and family, but it's always on your mind. I mean, I go to movies with my kids. I'm thinking about work. I'm not working. I'm thinking about work. When we're at work, we're working. But I try to stay engaged as much as humanly possible with what we do.
I love what you say. It's like even when you're not working, you're thinking about work. So it's like depending on how you define work, we're always working 24/7.
100%. It's every single minute, every single day. I'm thinking about some part of work. I can't help that. It's just how I'm wired.
Yeah. And one thing that I really like and I want to highlight is you say it's part of your soul. Like it's one of the most important things to you in your life. So this isn't like, oh, a means for me to make money. For you, this is something to sustain you. It's part of you.
Yeah.
The money is just a byproduct of the work you do. So it's fun for you.
Well, I do. I really love it. I think I was just born to build something, and I've owned multiple companies in the past, and I had a level. I was very passionate about it. I always had business partners in the past, and I wasn't able to necessarily do what I wanted to do all the time. So when I created this company, I really tried to create an image of me and like how I would want a company to run, a place that I would want to work for, but ultimately a place that I just truly love to be and around people I love to be around. And so that's how I built this company. But it's really just an integral part of who I am. Like I'm Roger, I'm the CEO of Pronto. And everybody knows it, everybody I think appreciates it. My real goal is, I think, is for my kids to see, the passion that their dad had for something. Some people it's golf, some people it's, I don't know, whatever that may be. That's my passion. It's my business. I don't have any other hobbies. I think that I hope that, as they age, as they get older, they can look back and say, my dad built something great. And in doing that, he gave us a great life. And he was also very fulfilled on a consistent basis because he was doing what he really loved to do, which was build a company that meant the world to him.
I love that. You said something, and I think that's a great transition point. You said you wanted to build Lone Pronto in your own image, in Roger's image. Tell us what that image is like.
I wanted to, in a nutshell, I wanted to build a place that people love to work at and clients love to work with. I felt as if the mortgage industry in general was antiquated, not as a whole, but a lot of it antiquated, boring, suit tie, had a really challenging time bringing in young talent. I think everybody was a lot of companies are doing things that the way things have always been done. I don't really function like that. Like I'm very malleable. I can change quickly. I don't think things should always be done the way that they should be done. I don't always think I'm right, but my goal was to build a company that reflects me. Like, I like to have a good time. I like to enjoy my life. I love working, but I also think there's a balance. There's a teeter-totter of like work, have fun. And so we always try to find that balance. And that's kind of how I live my life. I wanted people that were passionate about what we were building. And I wanted everybody to really row in the same direction, which is how I kind of try to live my life. But I think that's in a nutshell. I just wanted to create a great place where people were like incredibly proud to work. Like they're proud to wear our hats and t-shirts in public. They're proud to talk about what we do and why we do it. When I like that when my employees are in a vehicle driving with friends and family, maybe they're in a vacation in Charleston, they hear one of our radio ads. I want people to say, that's the company that I work for. Like, I'm really proud of this. Like, look at what we've done as a small company, the brand that we're building.
So that's the sense of like the family, the qualitative stuff of what you wanted to build, like the day to day. Was the business model that you have, because you have one of the most unique business models, and I love to dig deeper. Was the business model part of the vision as well, or was that just like a method to create the qualitative?
So, backstory: I owned a company, and it's still open. I started my first company in Charlotte in 2007. Super young guy, had no idea what I was doing. I was young and dumb enough, but also smart enough to realize I wanted to do my own thing. But I was just also dumb enough to think I could really do it. It was really tough for quite a few years. I did this loan. I was doing a mortgage one time. It was a referral, and the guy's name was Bob, and he had the Bob and Sherry show. It was it's a syndicated show, but primarily it was in Charlotte. He lived in Charlotte as well. I don't personally listen to the radio a lot, which is kind of odd. I'm a podcast guy. I listen to a lot of books. I love music, and it's usually through Spotify. Even back then, I wasn't really listening to a lot of local radio. And I did a loan for him. I knocked out the ballpark. Did a really good job. And then everybody's like, "That's Bob from Bob and Sherry." I was like, "Well, I don't know who Bob is. I don't know who Sherry is, but that's fine." And he mentioned one day on the radio that he had got a refinance. He wasn't plugging me. He was just, it's a morning talk, drive time radio. So they just talk and they're conversational. And people started calling him and saying, where'd you get that mortgage? And this was like 2010, I think. And he called me. He said, "Hey, I just want to let you know that I mentioned this on the radio and people called in. There may be something here." I said, "All right, that sounds great." His sales guy, who oddly enough I work with today, 15 years later, called me and said, "We should look into doing this." And I had a kind of shitty website at the time. I didn't have a CRM. Like, I didn't have a lead funnel. I didn't really know what the hell I was doing. And we launched our first radio ad, and it did okay. And then I said, "Okay, this can't work unless I rebuild my website." So we spent a lot of money rebuilding our website. We created a really good rate flow engine, which oddly enough is what a lot of people use today. I think we're a little bit ahead of the curve on that. And then we came up with something called the rate reduction home loan, which was a simple zero cost refinance. And it blew up. I mean, it was literally like a hockey stick, and it just went up fast. And then I was like, okay, this is a really good way to market, because up until that time I was buying Lending Tree leads, Lower My Bill leads, and I just really struggle with relying on somebody else for my own success, especially somebody that can change my pricing, which we've seen in all this rate table stuff throughout the years, And so I did radio for all those years. So when I launched Loan Pronto, I always knew I was going to be doing radio. It was going to be the core of what we did. Right. And so we launched in 2017. I had to spend 4 or 5 months building my website. And as soon as the website was done, I launched Charlotte. I launched Raleigh. Once those markets became profitable, I added Nashville, Charleston, Northern Virginia, I can't think. Virginia Beach, Norfolk, and we kept adding markets from there. So our model in a nutshell is we are advertising first. We don't buy leads, so we're not on lead aggregators. We primarily focus on creating very edgy marketing that is going to create inbound calls or inbound leads to our website. Our website is works. It's a machine. We get about 10,000 unique visitors per month. Of those, we end up with 16 to 1,800 unique leads per month that are then divvied across approximately 17 or 18 direct-to-consumer LOs. Behind all that, we have a very
sorry, Roger, is it okay if I pause for a second?
Yeah.
Your website has a 16% conversion from visitor to lead.
Oh yeah.
Wow. Just to put that in perspective for people, the industry average is like 5%.
It's really good. It's a really good website. It works well. We're always tweaking it. We're always building it. We actually, oddly enough, of those 10,000, 3,600 start the lead flow. But we, generally speaking, we lose about 50% of those people, which is above an industry norm as well. So it works incredibly well. And then from there, we have an incredibly good, we do a lot of digital social media, retargeting, remarketing campaigns. Also, once we get all your data, we also, you go into our Salesforce database. We have Salesforce account engagement, which used to be known as Pardot. So once you get into our system, we have very thoughtful drip email campaigns that are going to hit you over the head for the life of your until you tell me to shut up, until you buy or die, I guess. And so we're always building that. We're always staying in front of our past clients, whether or not you did or didn't close a loan with us. We're always giving you relevant data. But once you get into our system, you're going to hear from us probably once every 14 days until you buy or die. And so we have our conversion rates on our stuff is usually about 12%. So of the leads that come in, we usually convert around 12% of those leads into a closed loan.
So you get 1,600 leads a month, like in an average market, not a good, not a bad, 1,600 leads on average. And out of that, you're doing about 180 to 200 loans a month.
We usually close about 180 of the leads that come in. We average about 250 units a month. And then the rest are just going to be just nurturing our past clients in a very intelligent way, finding out.
You get 50, so 20% of your volume is just from past client nurture.
At least 20%. Yeah.
At least 20%. And that's again in a regular market, not like a refi heavy market where everyone comes back.
In a refi heavy market, we would probably see our leads triple, like if we think about even the short burst we had from August 4th through mid-September of 24, our leads were doubled within a couple weeks. And so in a sustained low rate market, we would see those leads probably triple or quadruple, and our conversion rates would go up as well.
So I have so many questions. Can I ask them in no particular order?
Yeah, fire.
Okay, perfect. One is how quickly does the consumer know that rates have dropped without you letting them know?
In general?
So let's say like today we have a really good rate pay. Does the consumer know today? Like, do your leads pick up today, or does it take some time for them to hear about it and your leads pick up later?
They will pick up quickly because we will change our messaging quickly. I mean, like if something happened, well, for example, last August, the jobs report I think hit on August 4th of 24, came in really low, and the market just tanked. Well, the rates tanked in a good way. That was a Friday, and on Monday, across 45 radio stations, I had a new message out. So the messaging changed completely. My clients, and then what we do through Salesforce, through my marketing automation manager, is we start parsing out deals that make sense, right? Anything over X percent, X credit, whatever it may be, VA, FHA, we can really get granular on then creating with it. This can happen the same day, is we will blast email our entire database, but then create a very specific campaign through text and email to our current clients that we've closed with in the past. And they'll get hit with a text, email, and then generally speaking, we'll also hit them with the outbound calling as well. My database will know within a day.
And it's specialized to them, because like you're like, it makes sense to them. That's how you filter that.
Yeah, it basically will say, hey Sam, you closed a loan with us in August 2013. Your current interest is 7.49%. Based upon the current market, we could likely get you down to 5.99% with X amount of closing costs. Give us a call when you get a chance. It'll be branded to that LO. It can go, and then with Pardot, if they do not open the email, I can then do another chain of emails. If they do open it, I can do another chain of emails, like an inlay text upon that. You can get really, really quick. You can get a lot of quick results very, very quickly. Unfortunately, the consumers don't really know it's happening for a few weeks or until CNBC or CNN or somebody picks it up. But our goal is to make sure people know almost in real time.
And that's how, because you are competing against servicers as well. That's how you can beat the servicer, by being first to say, hey, you have an opportunity right now. It sounds like you're even giving them the cost. So when they come in, they're already sold. You're just facilitating the transaction at that point.
Yeah, and more importantly, this isn't the first time they've heard from us in the last 2 years, right? They've probably heard from us over a 12-month period of time. They've probably heard from us, 20 to 25 times in that period. So it's not, I think where a lot of companies, actually, I know where a lot of companies truly fail, is the belief that their clients are as sticky as they want them to be, right? And that's just not how it goes. I mean, you've trained LOs in the past, like, people forget about you. It don't matter how good of a look, it doesn't matter how well you did, how much you thought you guys were buddies or friends, they're going to forget about you. And where almost every company fails is the inability to stay in front of your clients with relevant data on a very consistent basis. And so when the servicer calls them, they're not even thinking about calling that LO. Like, well, why didn't you haven't heard, I haven't heard from you in a year. And the LO's pissed off because, why didn't you call me, Sam? Well, Roger, you never called me. Like, I didn't hear from you for a year, and New Res or Mr. Cooper or Penny Mac called me with an offer. I moved forward, so staying top of mind is incredibly important. And maybe 3% of companies do it well, probably less, but it's a very small swath of companies do that at a world-class level. I think that we do really well at it.
This is the best I've heard, like, especially like breaking down based on open rate, response rate, all of that. My other question, in no particular list of questions, is people always say money is in the follow-up. So what's the average of your 12% conversion? So when does it happen? On like when they come in and it's hot, or does it happen in 3 months? Does it happen in a year? How does the conversion breakdown happen based on time frame?
It's quickly. I mean, our cycle time is very quick. I mean, somebody hears a radio ad on any of our channels. We're all over the United States. They're calling us very quickly. And I think 15% are calls. The other 85 are website leads. But it's a very warm lead. They've raised their hand to us. They're expecting our call. Our goal as a company is to get in front of all leads within 5 to 10 minutes. We're trying to reduce that with technology, but right now we're getting a lot of leads in, and we can only work so quickly. But generally speaking, I mean, if a lead hits today, that lead's probably going to close in the next 3 or 4 weeks. So the cycle time is incredibly fast. Now there are some that nurture for long periods of time. Maybe we didn't hear from up front, maybe they didn't think about it. But I mean, we had 20 new loans come in yesterday, registrations, and most of those were leads that were within 48 hours.
Wow. What is your capture rate on those leads that you don't get an application in the first 48 hours?
I don't know. That's a good question. I don't have that data. Once a lead ages out for a certain period of time, it goes into a new team within our company that just outbound dials those people, So any lead that's within the last 6 months, we throw into more of I hate to call it a call center. It's more like where our LOs and training work, and they just call nurture all day long through a power dialer. And there's a lot of money in those as well, right? It's either somebody who wasn't interested at the time, they had a family problem, whatever that may be. Maybe they worked with another LO or another mortgage company, and shit just went off the rails, and now they're actually still interested again. With anything though, the older the lead, the less conversion. But we're calling leads right now from March and April, and those people are now interested because rates are a little bit lower. So there's always money in your database, but newer is always going to be a higher converting lead.
Yeah, that makes sense. And what do you track your recapture on your past clients? Like what percentage of your past clients do a loan again with you?
I don't do that well. Man, there's so much data. I think you've worked at a place that had Salesforce in the past. So, like the amount of data that you can aggregate through Salesforce, you can get lost in the weeds quickly, right? You can only aggregate so much data and make actionable moves based upon that data. I don't have that data. I know that roughly 30% on any monthly basis, 30% of what we do is going to be a past client, either accessing equity, purchasing a new home, refinancing. So I know that roughly 25 to 30% of every single month is going to be a past client that we've worked with.
That's amazing. That's amazing. And at this point, you guys have how many past clients?
Oh my God.
Have you cracked the 100,000 mark yet?
No. I mean, probably 7 years, probably 30,000, 25, 30,000, I'd say.
Oh, that's right. Yeah.
Yeah.
I always confuse your past company with the new company because it's
Yeah.
a new company that you started.
Yeah. So, I mean, we have, probably roughly 25 or 30,000 past clients that close and probably another 150,000 leads that have come in throughout the year. So roughly, high 100,000s of people that are in our database with a lot of data, address, name, you name it, enough to be dangerous and get what you need.
So technically, you could stop your ad spend or a radio advertising spend and just work your database. Not that you would, but you could, and still be a very profitable mortgage company for a very long time to come.
Yeah, the data is the oil, right? I mean, that's where the gold is, and aggregating that in an intelligent manner, and then taking the right actions at the right time is where we do exceptionally well. Yeah. So data's king. We have to have it.
Roger, when we were talking on phone a couple of weeks ago, you said something that I really want to focus on for a little bit. You said you have two parts to a company. You have the advertising, but you also have the relationship, the referrals, the actually taking care of. Tell me more about how you look at the referrals and all of that in your business.
Oh yeah. Many direct to consumer companies struggle with the relationships on a long-term basis. And there's multiple reasons for that. One is they don't stay in front of those people very well. We've already talked about that. Two is they're very transactionally based. They're looking at the new lead that comes in and not really understanding there's a lot of value in the past leads. So we have really emphasized the importance of, first, you have to treat people exceptionally well. If you go on Google and look at our reviews, we're up to almost 2,500 5-star reviews right now. We actually pay our processors a commission for any 5-star reviews. Step one, you have to create a lasting experience where somebody is compelled to leave a positive review and talk about it, so they remember you. That's the first step, and that's where a lot of companies go off the rails because they just don't treat their customers well. The need for speed often exceeds the need for great customer service. So you have to start there, right? And then you have to stay in front of those people on a consistent basis, which we've talked about. You also have to nurture those relationships when they come in. So like right now, a lot of our purchase business isn't coming from us hitting the streets and meeting realtors. I'm not opposed to that, but we just don't do that. I mean, but when those realtors do work with us, we have to create a 5-star experience for them every single time. And we have to get, so what we do, then we get those realtors and we put them in our database, and we create a very thoughtful weekly. Actually, we email our realtor database once every 3 times a week. So Monday, Wednesday, Friday. So Monday is just what the market did last week. What's it going to do this week? Wednesday is winning Wednesdays. Let's talk about a program that we have or something that's valuable. And Friday is just a rate update, right? So we're staying in front of all these realtors on a very consistent basis as well. And our LOs get paid more money on a purchase referral, right? They get a lot more commission on that. So we've really had to train people like, hey, these new leads coming in are incredibly valuable, but you have to run a hybrid model where at your desk you can balance your leads, but also build local relationships as well. So I call it a hybrid direct consumer referral based model. I think we do it exceptionally well. We're doing 25% purchase business right now. In 2019, 20, and 21, we did 99.9 refi. So we've really had to retrain our LOs to understand that the leads coming in are incredibly important, but there's also a lot of profit in that referral-based model as well. So most LOs here do a combination of direct consumer, and then they also have a referral-based book of business as well that they're constantly nurturing, and we're helping them nurture that for them.
Amazing. So is it the same loan officer who's taking care of the leads is also taking care of the radio leads, is taking care of the realtors, or is it a different team?
We do not create two different teams here. Nope.
Okay.
I mean, they run both books of business at once.
Gotcha. And do you find that some people have the skill set to also manage the realtor relationships while others are slower to adapt that skill?
100%. Some people are naturally good at building relationships, and some people just aren't as good at it. And that's just something that we have to accept. And the best LOs on our team are able to run a good purchase book and a great direct consumer refi book as well. But not everybody does it as well as others.
It's a skill. It's definitely a skill. I came from the relationship-based business, and best people in the relationship come from the direct-to-consumer model because they get the value across really quickly. But also the people that struggle the most come from direct-to-consumer because they don't take the time to slow down. Even though you have to get your value across fast, you still have to slow down for the other person. It's a fine balance. You said something about training. When you bring in new loan officers, you train them on old leads. How do you approach training specifically with loan officers?
So that's a great question. And for 3 years, we hadn't really hired any LOs. So my staff of LOs were highly seasoned, incredibly talented people that would excel at any company they went to. I have some A players here. Most of them are. So we just now, over the last couple of months, started building a secondary team because we do have the need to grow again, right? Like you can strategically stay right size for only long enough before the need to grow is important. And so we have hired we have 5 people that have moved onto our team, 2 internally and 3 externally. And some of those have no LO experience at all, right? So what we do and what we have done and are currently doing is just train those people. It's like, John Wooden, the UCLA coach, he would start by just teaching how to tie your shoes, right? And it seemed, so simple. We look at it like that. Like, you need to learn how to use our technology. I mean, we have a ton of technology here. We're a small company, but to excel in a direct consumer atmosphere, you have to have dialers, all the certain AI stuff. You have to have Salesforce, Dialpad. There's a swath of stuff we use. You have to learn how to use that stuff. Right? You have to learn how to answer. You have to learn how to answer a phone call in the right manner. Like, do you sound good when you say, "Thank you for calling Loan Pronto"? So we start there, and then as they grow, we start teaching them more stuff. How to transfer a call, how to vet a call. Okay, now that we've vetted a call and you've asked the necessary questions, why did we ask those questions? Like, why was that important? And so you're learning the very basic building blocks of like how to interact with the client, the data that you need. And from there, we do training wheels, right? We take really small steps. Okay, now that you've got really good at transferring calls, you're vetting calls, you learn how to use our dialing systems, how to use Salesforce. Now you need to start interacting with clients more and digging deeper, asking the next layer of questions. And then from there, we start saying, okay, now you can start working nurture leads back 6 months. So we'll power dial them through nurture leads. And once they can start selling a client, explain to a client the benefits of working with Loan Pronto and why they should refinance or purchase a home. Once they can start transferring those calls that equate to closed loans, then we'll start getting them leads, right? We'll start with the small leads, right? Like we get a lot of HELOC leads at $50,000. If I lose that deal, I'm losing $1,500, right? So there's some margin of error there that we allow. Once they become really good at those leads, right, then we start getting bigger leads and bigger leads. And until they're to the point where they can consistently close $2 million a month, at that point in time, we put them 100% commission and we let them rip, let them fly.
Wow. So your loan officers, they don't get laid off during bad times. They get world-class training. They get unique leads, and they get a salary since at the beginning, we'll all get trained up, and anything else.
Benefits.
Benefits. That is
Yeah.
so much you're giving
Yeah.
them. Wow. And this is, and you say you're a small shop, like for direct-to-consumer shops, where would you say you lie?
Look in terms of what? Quantifying what?
So like you have like massive companies like Mutual of Omaha. They're huge. PenFed is huge. But like once you leave that category, where would you say how big is Loan Pronto?
I mean, if you heard us on the radio, you think we're a lot bigger than what we actually are. We're 50 employees. We're 50 employees total. Of those,
Fantastic.
20, we have 22, 23 active LOs. Our average LO right now closes, 11 to 12 loans per month in this type of market. So I don't know size wise where it puts us, but we'll probably close, we're on track to probably close 750 million this year in this current market. It would go up quite a bit higher with any sustained drop of 0.5% or more. I don't know where that lands us. I don't know. I mean, I don't know the
I think
exact
the main point I wanted to get is that you're providing all these services and resources, but everybody still knows everybody in the company.
Yeah. Our goal is
no one's just a number.
Yeah. Well, no, they're not. And that's not really my what I don't really want is a monster company with a ton of employees that are mercenaries, versus missionaries, and that degrade the culture over time. So we like to grow intelligently and slowly and wisely, and we think that's the best way to build a great company.
And it goes back to the vision of Roger that you started the company with, a place people are happy to work with. So when they hear the ad on radio, they say, "I work at that company."
Yeah, that's it. That's right.
2 more questions for you, and thank you for giving us so much time already. What's one thing in the industry everyone talks about that you're like, that is BS, it doesn't really work? It's not, at least it hasn't worked for you.
I think I may be wrong about this. I think AI used in the way that people think it's going to be used is probably wrong. I think that there is the belief that it will replace. I think it's going to enhance. I think there's, if you and I are both very active on LinkedIn, and everybody's talking about AI, and it's great. I mean, we are inlaying it throughout our company a lot of steps right now, especially from a sales perspective. I think a lot of companies are going to make some pretty fundamentally big mistakes in trying to replace employees with AI as opposed to enhancing them with AI. And I think people are going to do it very quickly and rapidly because it sounds great. I think that they're going to pay the price for that long term. The companies that are just enhancing their sales force, enhancing their operations staff, I think are going to really excel. I think the smaller to mid-sized companies, 50 to 200, are going to really be able to catch that tailwind because you can easily deploy this stuff across your organization. But I do think that AI is going to be misunderstood and very misused by a lot of companies in the near future. I could see it. It's like what people are saying online. Like if you go to my website right now, my mantra for our company right now is mortgages made human, right? That's not by accident. That's because I think a lot of companies are going to go down this digital path, and they're going to realize it very quickly that somebody who is buying a home or refinancing or accessing equity, they want a human. Now, maybe an AI agent makes first contact. Maybe when they call into us, an AI agent answers. That's great. That's enhancing. But the second you try to replace a human with a computer, people are going to, I don't think it's going to work like people think it is. I could be wrong. I don't think I am, but I think that's a big mistake people are going to be making.
And I think that the cost of being wrong on letting its staff go is really big. you can
Yeah.
bring it back to what you said. Like, you don't want to take the sail off of a sailboat.
Yeah.
So a lot of people are saying like, cut costs. There's so much cost you can cut with it, but will you cut the revenue, the upsides when the market is there for you as well?
That's it. I think that's what I've noticed recently. That's my
That's
answer.
that's a hot take. I'm gonna find someone that's on the opposite end, and I want you guys to discuss it. That would be really fun.
Oh yeah, I mean, there's all kinds of companies out there. I mean, look at Better.com. I mean, all they do, they've spent billions in AI, and there's brokers out there, and I know that are doing more business with them than with a fraction of the employees. So it sounds really sexy. It's a great talking point. AI mortgage sounds great. I don't think it works just yet. I don't think it ever will. I could be proved wrong time though.
I think the human touch is something we crave. We're social animals, so I doubt we will fully go away from it. Final question: what advice do you have for loan officers?
Ooh. It's a really good question. I think you have to be incredibly patient when you start. You're not going to see the rewards happen as quickly as you hope they're going to happen. You have to constantly be honing your skills on a consistent basis and with the ability to change in light of new evidence that you need to change. You're probably going to have to work a lot harder than what you hoped that you needed to work to be very, very successful. You have to be incredibly humble. And I think that you just have to be really kind to your coworkers, especially your potential clients. I think that we in the need to pick up deals, the need for speed, the need to build up your pipeline. I think a lot's lost in that. You can be abrupt with your clients. You can be pushy. You can be too salesy. It goes back to being very patient. Like kind of like sometimes when you're fishing, right, and you get a big fish on the hook. Like you let the line go for a long. You let like the rip out. I think that a lot of people need to do more of that. Waiting a day for a client to say yes is likely going to equate to more closings than pushing a client to say yes instantaneously. And so back to just being incredibly patient and incredibly kind and just constantly understanding that you're not doing everything correctly and you need to change over time, and the market may require that and your numbers may suggest that you need to change as well. But with anything, just you're constantly honing your craft, you're reading, you're listening, you're following people like yourself on LinkedIn. Lastly, I think a lot of LOs right now are missing the boat on their personal branding. I personally will feed you leads until you can't eat them anymore. And that's great. But at some point in time, your personal branding is incredibly important. Instagram, LinkedIn, whatever that may be. I think a lot of LOs struggle with that. I have LOs here that are great on camera and they won't do anything because they're so used to taking leads. But I think that your ability to create your brand, it's incredibly early in your career, is going to impact your numbers in a positive way over a very, very long period of time. So the earlier you can start doing that, the better off you're going to be.
So be patient, be kind, develop your skill, and develop a personal brand. And I will just say on that personal brand, my experience has been that having a strong personal brand is like playing on easy mode. Everything becomes easier. Everything.
Yeah.
Roger, you've been amazing. Can loan officers reach out to you if they have any questions?
Yeah, all right, brother. Appreciate it.
Roger, can people reach out to you if they have any questions, loan officers?
Yeah, absolutely. I'm on LinkedIn all the time. It's Roger Moore, and then my email is roger@loanpronto.com. I love talking with people.
Thank you, Roger.
Always happy to chat.